Everybody. So in this video, we are going to be doing the first part of our example for chapter one. And in this one, we're just going to be dealing with analyzing. And then the next video, the next part, we will be dealing with taking the stuff that we analyzed and putting it into financial statements. So let's go ahead and get started. This one, we are dealing with Alpha Company. And so we're going to be using a chart that kind of looks like this. It depends on what you're using, but this is just letting us know here's the accounts that's going to be affected and how much and do they go up or down and whatnot. So let's go to the first one. Alpha Company received $8,000 cash investment from a friend in exchange for common stock. So I'm going to show you kind of how I go about doing this, and I'm going to start now because it's really going to help you maybe in the later chapters as well. But as I go through this, usually the first question that I ask myself is cash involved? Typically, cash is involved. Not always, obviously, but more times than none, cash is going to be involved. So if I know how cash works, I can probably figure out the rest of it. The rest of the problem. So, is cash involved in this transaction? Well, yes. It says that we received $8,000 cash. So now that we know that cash is involved, how is it being affected? Well, it's going up because we received it. Remember, we're the company. We're Alpha Company. So our cash is going up. So what I'm going to do is I'm going to put in under cash 8,000 positive because it is going up. Now we have to have something on the other side because it does have to make the accounting equation equal. Remember, the accounting equation is assets equals liability plus equity. So if we only have 8,000 under assets, that means 8,000 equals 0 because nothing is under liabilities and equity right now. And that doesn't match. So we have to have something else here. And so the other side of this would be common stock. Our common stock is also going up by 8,000. The investment in our company is going up. So I'm going to also add 8,000 under common stock. Now, one other thing that I do, this is just something that's personal for me. I'm sure that it's not being asked of you, but it's just nice to have these little extra notes and tips and hints that's going to help me for later stuff that I know it's coming. I know I'm going to have to do a statement of cash flow. So what I'm going to do is I'm going to go ahead and give myself a little note that says where this would fall up under the statement of cash flow. Remember, we talked about those three activities that are on the statement of cash flow. We've got operating activity, investing activity, and financing activity. So I'm just going to go ahead and let myself know this is dealing with investors and creditors. This is cash coming in from investors and creditors. So this would be a financing activity. So what I'm going to do is I'm just going to put a little FA to the side that says, hey, this is financing activity. And that is transaction one. Let's do transaction two. It says Alpha Company purchased supplies for $1,000 cash. So again, is cash involved? Yes, cash is involved. What is my cash doing? It is going down this time because we paid $1,000 cash. So I'm going to put negative 1,000 under cash. Again, we use parentheses to notate negative. So my cash goes down 1,000. What else has to happen? Remember, we got to have another part here somewhere to make the accounting equation equal. So in this situation, the other side would be supplies, which is another asset actually. So what are my supplies doing? Well, I paid $1,000 and I'm getting $1,000 back in supplies. So I just exchanged assets. So I want to put $1,000 under supplies. And so again, just to check the accounting equation, negative 1,000 plus 1,000 gives me 0 under assets, and 0 equals 0 liabilities and equity. So again, we're still following the accounting equation. And so also I'm going to give myself that little note again here. This is going to be an operating activity because this is just day-to-day stuff. This is not investing. This is not financing. This is going to be operating activity. So if you're trying to do this on your own, and I would highly suggest you do this, if you're going to do this on your own, pause this video right now and just try the rest of them on your own, just to see if you can do it on your own. This is a good gauge to see kind of where you're at and what you need help with. And kind of one of those things is where you need to know what you don't know. And so pause the video, finish out this chart, and then come back to the video and check your answers. So what I'm going to do is I'm going to keep going, and hopefully you paused it already. I'm going to keep going through transaction 3. Alpha Company paid $2,000 cash to acquire equipment. Is cash involved? Yes, cash is involved. What is our cash doing? It is going down. So we're going to put negative 2,000 under cash. And what is the other side? It's going to be equipment. My equipment is going up, and it's going to go up by 2,000. So I'm going to add positive 2,000 to the equipment. Again, it follows the accounting equation. And in this one, we're dealing with equipment, and equipment is a long-term productive asset. And so for that reason, this is going to be an IA, or an investing activity. All right, let's go to transaction 4. It says Alpha Company purchased an additional $1,400 of supplies on account. Is cash involved here? No, cash, it says on account, so we know cash is not involved here. So what are we expected to do if cash is not involved? Well, we're expected to pay $1,400 at a later date. It says on account, so it's kind of like putting it on our tab. So we're going to pay that at a later date. And so for that reason, it's a liability. This is going to be our accounts payable. So under accounts payable, we are going to put $1,400 because our balance goes up. Think of it kind of like a credit card right now, in the sense of when you purchase something on a credit card, the balance goes up. So we're going to put that as a positive. And then what is the other side of this? Well, we are also getting supplies. So our supplies goes up by another $1,400. Now this one's not going to be operating activity, financing activity, or investing activity because it's not going to have an activity at all. There's no cash involved, so there's not going to be any statement of cash flow recognition on this transaction by itself. So I'm just going to leave this one blank. Or if you want to put NA because it's not going to go on there, that's fine. It'll come back a little bit later on. But right now there's nothing because there's no cash. All right, let's look at transaction 5. Alpha Company obtains $1,240 cash by consulting with clients. So we've actually done something now. We've done some work. Our clients have paid us $1,240 cash. So we need to record that. So is cash involved? Yes, cash is involved. It does go up. Our cash does go up because we received it by $1,240. So I'm going to put positive $1,240 under cash. And what else is happening? Well, this is money that I've earned. And so this is going to affect our retained earnings. This is going to make our retained earnings go up. So under retained earnings, I'm going to put $1,240. I'm also going to go ahead and give myself that note. This is day-to-day operations. So I'm going to put OA. And one other thing on this one I'm going to put something out to the right side because yes, it does make my retained earnings go up, but really what is this? And I've done some work and they've paid me cash, but the main part is I've rendered that service. So this is what I've earned. So therefore this is a revenue. So to the right, I'm just going to put REV. Again, this is going to help me constructing my financial statements. So let's go to transaction 6. Alpha Company paid $400 rent to landlord for the building where its facilities are located. So is cash involved? Yes. Now it doesn't say cash, but if it doesn't say cash and it doesn't say on account, we can kind of assume that it's on cash unless it explicitly says on account. So our cash is being affected. What is it doing? It's going down. So I'm going to put negative 400. And on the other side, this is I'm using the building. I'm using this facility. So this is making my retained earnings go down. And so I'm going to put under retained earnings negative 400. Again, this is day-to-day operations, so this is going to be OA. And then this is something I've used, so therefore I'm going to expense it. So this is an expense. I'm just going to put EXP out to the side. All right, transaction 7. Alpha Company paid $600 cash towards the salary of its only employee. So again, is cash involved? Yes. What is my cash doing? It's going down because I paid it. So we're going to put negative 600 under cash. And again, this is I'm using someone else's services. So therefore, it is making my retained earnings go down. This is going to be natural day-to-day operations, so OA. And this is again going to be an expense because I've used their services. So I'm going to put EXP. And I know this is a lot, but this is, like I said, this is getting us ready for the next step too, so you don't have to come back and read all these things. So let's look at transaction 8. Alpha Company provided consulting services of $1,200 on account and rented its facility to a customer for $200 cash. So there's a couple things happening here. Okay. First question, is cash involved? Cash is involved, yes. What is our cash doing? In one situation, it's going up. How much is our cash going up by? Well, they only paid us $200 cash. So our cash is only going to go up by $200. Is there other things that they owe us? Yes. There's other things that they do us, they put on account. So what is expected to happen to that $1,200? Well, we're expected to receive it. This is what they owe us. They put it on their tab for us. So our accounts receivable, because we're expected to receive it, our accounts receivable goes up as well, the balance of what they owe us. So we're going to put $1,200 under accounts receivable. Now, in total, under assets, that's $1,400. So we need to have something that's going to offset that or make the accounting equation equal. This is something that we've earned. we've done two things actually. We've provided a service and we've provided a facility. So we're going to put that under retained earnings because it has made our retained earnings go up. So we'll put $1,400. That makes the accounting equation equal. 14 on one side, 1,400 on the other side. This is day-to-day operations. This is what I make my money from. So I'm going to put OA, or operating activities. And then this is, again, revenue because I've provided them a service. So I'm going to put REV to the right. And that is transaction 8. Let's look at transaction 9. Alpha Company received payment of the services on account in full from transaction 8. So pretty much what this is saying is that the people that owed us money in transaction 8, they owed us $1,200. We put it on our accounts receivables because we're expected to receive it. They actually paid their bill off. And so we need to recognize that now. So is cash involved? Yes, cash is involved because that's how they pay off their bill. So what is the cash doing? Our cash is going up, and it's going up by $1,200 because that's what their bill was for. So we have $1,200 under cash, positive. And we're not going to put this under retained earnings as a revenue because we've already recorded it as a revenue. It's already under revenue, under retained earnings in transaction 8. So we don't want to record it as revenue twice. So where do we have to go with this? Well, they're getting rid of their bill. They're getting rid of what they owe us. So we need to get rid of that on our books. And we originally put it there on accounts receivable. So what we need to do is take it off of accounts receivable. So we will say negative $1,200 under accounts receivable. That gets rid of their bill. This is paying off a receivable, which was originally for a revenue. So this is our day-to-day operations. So this is an OA. By the way, too, and just kind of take a step back, in transaction 8, the OA was only in reference to the $200, not the $1,200, because we're only looking at what the cash does. So this one is OA for the $1,200. All right, that is transaction 9. Let's look at transaction 10. Alpha Company paid $1,000 as a partial settlement for its purchase of the supplies on account, which was from transaction 4. So if you remember back in transaction 4, we bought $1,400 of supplies, but we bought it on account. In this transaction, we're going to pay off $1,000 of that account. So is cash involved? Yes, cash is involved. What is it doing? Our cash is going down because we're paying off our liability. So we'll say negative 1,000 under cash. And then what is the other side of this? Well, this is going to be us getting rid of our bill that we owe somebody else, or at least partially getting rid of it. So our accounts payable needs to come down by 1,000. So we'll put negative 1,000 under AP, or accounts payable. This is, again, paying off what would have been supplies in transaction 4. If you remember in transaction 4, we didn't put anything down because there was no cash involved. We said NA. But now we're actually paying it off in cash. And so this will also be OA because this is, again, day-to-day operations. And finally, transaction 11. It says Alpha Company declared and paid $200 cash dividends to its owner. So is cash involved? Yes, cash is involved. What is it doing? Our cash is going down because we're paying it. So we'll put negative 200 under cash. And then the other part of that would be dividends, which again affects retained earnings. So it makes my retained earnings go down. So under retained earnings, I'll put negative 200. Again, makes the accounting equation equal. Because this is dealing with the paying off of or paying to investors and creditors, this is going to be an FA or financing activity. So I'll put FA there. And this is specifically dealing with dividends. So again, to the right, I will put DIV or dividends to let myself know this is specifically for dividends. Now we're done with the analyzing of each individual transaction. Now the last thing we need to do before we start doing the financial statements is going to be the totaling out. So if we total each column, add and subtract where they need to be, cash's sum will be $5,440. Accounts receivables will be 0 because remember the person paid that off. Supplies will be $2,400 and equipment will be $2,000. Accounts payables would be $400. We still owe $400. Common stock would be $8,000 and retained earnings would be $1,440. Now, one last thing, just to make sure that I'm on the right path, because we need to make sure that our accounting equation is being followed. Assets equals liability plus equity. The sum of all my assets is going to be $9,840. If I were to add up all my liabilities and equity, that again will give me $9,840. So at least I know I'm on the right path. Now that's how you do the analyzing of this problem. And in the next video, we will talk about how to take this information and put it into the financial statements. Hope you all enjoyed. Y'all take care.